Hey everybody, Joe Muck with the J Muck Realty Group here at Capital Mortgage Funding. I'm here with Becky Alley, one of the
Hello.
loan partners that I use when trying to pre-qualify, pre-approve our buyers and get some help in the mortgage industry. Becky and I were talking about some things that I saw come across the desk about new conforming loan rates or non-conforming. I don't know. It's not my business. Becky, it's your business. Let us understand more about what we're talking about here.
Yeah, so what we're trying to get into right now is some fresh, off the press, hasn't even come out yet really to the public generally, but they just announced that in 2019 they're going to increase the conventional loan limits up to 484,350, which was previously 453,100. What does that mean to you as a buyer? It means more purchasing power. It means that you don't have to, if you're trying to get into that higher price point, which again doesn't work for everybody, but if you are trying to get in that higher price point, you do not have to go and put as much money down. That means that if you're trying to buy a house for $500,000 and let's just say it needs some updates, you can now put just a little bit over 3% down to get you into that house for minimum money out of your pocket. Okay.
And so, just from my standpoint, I mean,
Mhm.
these numbers sound really high, and they're certainly not for every buyer.
Right.
But we're in Southfield. We're right near Northfield, Birmingham, Bloomfield Hills. I mean, some of the purchase prices there get over $1 million, but really, to have a $485,000 loan is not unheard of. It's pretty
No,
common.
it's actually, especially with like the reason why they're increasing these loan limits is because it's based off of October to October housing prices. And obviously, it's no secret that these prices have been going up over the last several years.
Right.
Now, to go back to that, they're not going to go to the moon. Okay, we are going to see a little bit of a plateau, if you will. They're not going to go to, your house that you're buying now for 400,000 necessarily is not going to be worth 600,000 in 3 years. Okay,
Sure.
that's the reality of it. But what this means as far as the loan limits, it's now opening the doors for that, like I said, more purchasing power for buyers, meaning you're not going to be you're not going to have these higher credit score limits if you go above. Whereas before, anytime anything your loan amount was over 450, you probably need a minimum of a 720. Some people don't have that. You might need a minimum of 10% down. Again, that's not always realistic. So now you're looking at your minimum down payment qualifying programs that you're now opening the doors for. You're looking at faster turn times because with jumbo, it's going to be a little bit more of under a microscope. So you're looking at sometimes the process is maybe 30 to 45 days, whereas on a conventional loan, we can turn them as quickly as 17 days as long as everyone is on the same page, right?
That's awesome.
Um, Another thing that we're going to talk about is FHA. Okay. Just like everyone doesn't qualify for FHA or for jumbo, right? Not everyone's going to qualify for your conventional loan limits. There are rumors, they haven't announced the exact dollar amount yet, but that FHA is going to be increasing their loan limits in 2019. Again, what does that mean for you? More purchasing power. Because again, just like there's different niches for each thing, now FHA is going to open the door for, again, a lower credit score criteria. The underwriting is not is it's different. You can have more of a debt load versus your conventional. So it's either cookie cutter, and then FHA again has their little bit of niches. So that's where you got to contact me and Joe to make sure that you fit in these programs because we are the professionals. We're going to ask you those right questions and get you those answers to make sure that we're putting you in these right programs that fit for you. So a lot of great changes, really cool, and these are things that are affecting buyers today as it is. So with Capital Mortgage, we have your jumbo products, you have your first time home buyer, we have your down payment, we have your MISDI, we have everything that you could possibly think of that's going to set you up for success. We have, but obviously it all starts with the pre-approval,
Yeah,
right?
absolutely. And you bring up a great point. There's a lot of times when I'm starting my search for somebody, the first thing that I have to understand is the loan product that I can deal with, because on our side of the MLS, we see whether it's conventional and cash. Cash is always an option. So
Mm-hmm.
conventional and cash,
Cash,
or is
yes.
it conventional cash, FHA, VA, FHA 203K. There's so many
Mm-hmm.
options, right?
Yes.
And some things mean you can and can't buy, and it
Correct.
doesn't matter who you're showing, where you're showing. If it doesn't fit those products, you can't show that house.
Mm-hmm.
So it's really cool to me as an agent showing people houses and listing houses that we have a bigger pool now that we can possibly reach to, whether it's on the FHA side, whether it's on the conventional side. The
Right.
fact that we have a little bit more room to get more people in, as they said, house prices have gone up.
Mm-hmm.
That's awesome.
Yep. And another thing that I've noticed is that sometimes buyers think that the house shopping starts before the pre approval process. And that really is not how it needs to go. In order to make sure that I'm setting you up for success and Joe's setting you up for success, we need to make sure that we have you in a price point that you're comfortable with. And the point of all this, this knowledge now is that we have multiple programs. It would be exhausting for me to rattle off every single little thing that we can get you into. And just like you're different from the next person, and just because your cousin's brother, sister, twice removed, bought a house for this price at this rate, everyone is different. Every mortgage product is different. So it's our job, my job specifically, to make sure that in the beginning we're setting you up for the right products, the right programs, and I'm letting Joe know what we need to do to make sure that we are going in on an offer to get you that offer, to make it as competitive and put yours up front in front of everybody else's, right?
Absolutely. No,
Yeah.
it's awesome.
Yeah.
And that's what, now you've heard me say this separately.
Yeah.
You've heard me say this with other lenders that I work with. It's time and time again, we always say the same thing. And I didn't even ask Becky, it just came out.
Yeah.
Pre-approval, first thing you should do. I understand why a lot of people don't think that way. And that's why we're constantly putting it out there. Get your pre-approval, because that's going to let you know exactly what you can do. Doesn't mean what you have to do. It means what you can do.
Right.
Whether that means $100,000 or $1 million, whether it means, this type of product or that type, it just lets us know your baseline. Then you can tell us from there what you're looking for in a house, and we can get you there.
Right. And the other thing is, let's just say you don't know. I don't know what I qualify for, Becky. I think my credit might not be, it's going to be subpar. The point is for us to have the conversation in the beginning. If you're even flirting, thinking about it, talk to us now. So that way we can set you on that timeline, get that game plan in order. So if you're not right there yet, by springtime, you can be there, or 6 months or a year or whatever, what have you, right? It's all about just setting you up for success and utilizing us to your advantage and making sure, like I said, you have that great pre-approval that is going to set you apart from everybody else. And another thing that's affecting buyers today is interest rates. Okay. I get a lot of, oh my gosh, rates are in the low fives, mid fives right now. That's, maybe I should wait. The answer to that question is do not wait. The rates are not going to zero. Okay. That is one of the biggest things that is on top of, you have all these great, exciting increases the loan amount, which means it's going to open up the pool for you to do a little bit more things. You also have interest rates that are not going down. Okay. If you think about it, we were spoiled for a really long time.
Absolutely.
The reality of the rates that we had were staying in the low fours. You could even, at one point, you could get in a high 2 on a 15-year fix. That was unrealistic for us to maintain that, obviously, because they were artificially deflated. The government was, keeping them where they're at. Well, now they're settling back to where they should have been. So this time next year, I'm not Miss Cleo, but I will put money on the fact that we are going to have, yes, we are going to see slightly higher interest rates than what we have right now. So what does that mean for you? Don't procrastinate. I've been doing this for 15 years, and I know that when they were in 15, 16, that was the lowest that they've ever been in the history of anyone that has even more experience than I have, right? But at the same time, when you're in the low fives, mid fives, what have you, because again, everyone's different. We can still get in fours in some situations, but those are still historically low. So the moral of my story is don't procrastinate. Just because it's the winter time and, I need to wait, now the rates are going to go low, it's just not going to happen. It's just not. So if you're thinking about buying, you want to buy, now is the time, because it's not going to the interest rates are not going to be lower. So if you think, I'm going to wait in 6 months and they're going to be down in the fours again, it's not going to happen. So
we could do a 30-minute video.
Yes, I could go on and on
about interest rates.
Yeah.
But there's so many things that affect it, because if the economy goes better and better and better, then the Fed slows us down with raising interest rates.
Mm-hmm.
If the economy doesn't get better and better, then we're going to stay with interest rates. So one way or the other, and when Becky says it, I don't want to speak for her. She's probably going to shake her head. Yes, we're talking about eighths or maybe 0.25% changes here and there, up and down.
Yeah.
But we're not going to see 3.5 or 3.75 anytime soon. So if you're thinking about buying and you're worried about the rates, there's no better time than now.
Yeah.
Keeping in mind, what do we always say? It's not really about the rate anyways.
It's not.
Really about your payment. Clearly, the rate is a factor of it. That's why you talk to Becky, get an understanding of what you're looking to buy and how much it's going to cost. Who cares if it's at 5%, 6%, or 100%?
Mm-hmm.
What we really care about is, does it meet your criteria?
Right.
So rates aren't going down. If you're rate shopping, it's time to do it.
Yeah.
And if you're just shopping at all, thinking about it, get your pre-approval done because we can go ahead and start figuring out a plan. So when you're ready to put a purchase agreement together, when you see a house that you want to go see, we're ready to rock and roll.
Yeah, absolutely. And the other thing too is another misconception is people think that if I'm pulling your credit now and you're thinking about buying in the next 60 days, I don't want my credit to go down. There's a huge difference between a mortgage inquiry and you going to Victoria's Secret or Lowe's and having your credit pulled. Just because I'm looking at your credit to make sure that you have a bona fide pre-approval, that doesn't necessarily mean that you're going to have these notches on your credit report. It does show up as an inquiry just to make sure that we're all on the same page and you understand the processes and that kind of thing, but it's not going to have a negative impact on your score. So that's something that is very I think it's brought up constantly, and I think that's a little bit of a misconception where it kind of hinders people a little bit. And as far as, it's wintertime, people tend to, I'm going to wait till the holidays, I'm going to wait till the first of the year, I'm going to wait till this. I mean, I just want to kind of bring it up to you, like some of the good things about what is a good time, why winter is a good time, right? I mean, just from my perspective, right? And, obviously you're dealing with it a little bit differently, but there's less competition, right? You're not
Absolutely.
going to get into these multiple bids where you're getting lost in it and you're shooting this house price through the moon because you're trying to outbid the next person. You're taking it up and up and up when in reality, the house still pays for it anyway. I think another good thing is that people maybe not think about, but you can see what your future house is really like in the harshest of elements in Michigan.
Yes. When we do inspections, we never want it to be a sunny day. We
Yeah,
want rain or
yeah.
snow or ice or something because this is letting us know what's going to happen. People will say like, well, what is my energy bill going to look like? Well, I don't know because you know what? I keep my house at 70 year round.
Yeah.
I have friends that keep it at 68 in the winter and 72 in the
I am a
summer.
heater fan girl.
Yeah.
So like
So
I'm the girl that's gonna have a I'm gonna have a heater going and then a fan blowing in my face.
So if you ask us what our energy bill is going to look like, we can't really say just because we look at what the current owner's energy
Mhm.
bill. What if they love it at 75 degrees in the summer and 65 degrees in the winter?
Right.
And you don't. So the point is that if you're in here in the wintertime, you have an idea if the heat really works. We
Mhm.
test it. Well, we don't test it, but the inspectors
Yeah.
test it. They check for so much stuff, but wintertime is a great time for inspections. It really is. And more importantly, like Becky said, there's less competition because
Mhm.
everybody has this thought process that it's not the right time to buy. It means there's less buyers out there. There's also some people who simply can't because of schools and kids and
Mhm.
activities. They really can't.
Right.
If you can take advantage of a market that other people cannot take advantage of. So there's really a no bad time to buy, but
Mhm.
it's really a great time if you can get out here when it starts getting cold here in Michigan and look at homes and buy some homes. Just keep in mind, it gets dark early. We like to try and see homes in
Yeah.
the daytime too. So
Yeah.
that's another factor.
Right. Yeah. So like a lot of exciting things. So again, we have higher conventional loan limits. That means you can buy more with less. FHA, again, you can buy more. You can get out there and not have to. Each guideline is going to fit. Every person's different. Every loan's different. And rates, it's a big thing, but it shouldn't be as much of a factor because it is what it is. My point of bringing up rates is because I've had people where, oh, I'm going to wait and I'm going to wait till they go down, go down. Well, life takes over. They, procrastinate. It is what it is. It's a human behavior. Everyone does it, but they missed the boat on that. So now they're chasing the wagon right now to try to make sure that they're capitalizing on where the rates are at versus when they're going to be in a year from now. Because again, these rates are still as low as they've ever been in, 40-year history, really.
Yeah,
Yeah.
and let me clarify too. We say it's not about the rate, but 1 year ago the rates were 1 point lower.
Yeah. For
So
a
one
one,
whole
yep.
point that is a difference.
It's a
We're talking
slow,
about a
yeah.
slow progression of change. If you're thinking about March or April
Hmm.
versus today, probably
Yeah.
doesn't make a big difference to you. If
Hmm.
you're thinking about a year from now, that could be huge.
Right.
So act now basically is really what it comes down
Yeah.
to.
Give us a call.
So speaking of which,
Mm.
Joe Muck, 313-283-4740, of course. But Becky, how can people get a hold of you?
You can call me on my cell phone, which is 734-778-8484, or you can get the Team Alley vibe. We got both my assistants. They're ready, always on the phones. And that number is 248-833-5197. We like to have fun around here, but we also like to get the job done. So give us a call anytime. We are always available. We're going to answer our calls. You're going to answer your calls. We're texting late at night. They
Yep.
call me the night crew around here because I'm always one of the last ones here at like 8 o'clock at night.
I
9
get
o'clock
my
at night,
calls
so-
from Becky at 8 o'clock at night. She's
Yeah.
like, I'm calling you back. You're my last call of the day. Oh my gosh, I can't believe it.
Yeah, so
Texting, calling, we both have apps. So, I mean,
Mhm.
however you need to get a hold of us, we can do it.
yep, get a hold of us. Let's get it done. Bye.
Have a good one, everybody.